Welcome to the latest episode of PolicyCast. As New Year sets in, the market buzz is all about pre budget expectations from the government. As India prepares for a landmark budget that will usher in the new Income Tax Act from April this year, the list of pre budget recommendations is quite extensive. Few of them top the list and deserve to be discussed. Let's hear from our tax partner Richa Sawhney what the taxpayer hope for in this transformative year. Welcome to our PolicyCast series, Richa. My first question to you is regarding the salaried class taxpayers. What changes do we expect for them in the upcoming budget?
Thanks, Shilpa. So, as far as the salaried class taxpayers are concerned, considering that in the last year's budget, major overhaul of the tax slabs under the new tax regime was carried out, which benefited a major chunk of taxpayers, we do not really expect any significant changes for the individual taxpayers in this year's budget.
Understood. Over the years, lot of circulars have been issued under the 1961 Act. With the new Income Tax Act coming into force from April 2026, what can be done to help taxpayers smoothly transition into the new Act?
Well, it may be useful to issue a master circular collating all circulars that are applicable as on 1st of April 2026. Now, for ease of navigation, while taxpayers are still getting familiar with the new section numbers, this circular could incorporate references of the sections of the new Act along with the relevant sections of the 1961 Act. It should obviously exclude circulars related to sections that are no longer in vogue and have been removed from the new Act. Updating and reissuing this master circular annually would enable taxpayers to easily identify applicable circulars and also support government's objective of making tax laws more user-friendly.
That's indeed a taxpayer-friendly approach. Do you believe it is time to consider a single unified ITR form, especially with the upcoming overhaul under the new Income Tax Act?
See, currently there are 7 different ITR forms and each one is designated for a specific category of taxpayer. This multiplicity obviously creates confusion, adds complexity, and increases the likelihood of filing errors. The government had in the past considered introducing a single uniform ITR form to simplify the filing process and to make it more user-friendly. Now, with the new Income Tax Act coming into being, which will in any case require a redesign of the ITR forms, this proposal, I think, merits fresh evaluation. A unified ITR form that allows taxpayers to select their entity type, their income sources, and then displays only the relevant pre-filled schedules could significantly enhance the ease and efficiency of return filing.
Yes, if this happens, it will certainly ease the return filing process for the taxpayers.
Absolutely.
Now, what's in your view are the key expectations of taxpayers on a dispute resolution and prevention front?
While there are many recommendations, I'd just like to touch upon the 2 key recommendations. The first one is on the dispute resolution side. Now here, there is a need for time-bound resolution of appeals at the CIT appeal level. The Act should mandate adherence to stipulated time frame for issuance of order by the CIT appeal, and this will help unclog the system and clear the backlog at the CIT appeal level. Secondly, on the Dispute Prevention Fund, while the Board of Advanced Rulings or the GAAR has replaced the Authority for Advanced Rulings, however, its effectiveness as a tool for tax certainty has diminished as the ruling is not binding on the tax department. So, these rulings should be made binding on the revenue, and also the composition of bar, which is currently manned by senior tax officials, that should be reconsidered. So, that is one of the asks by the taxpayers.
Okay, that sounds reasonable as well. One of the most talked about topics is GAAR. In the recent past, we have seen orders invoking GAAR. Is there a need to provide more guidance on this? And what are the taxpayers' recommendations on this?
So if you look at GAAR, or the general anti-avoidance rule, it applies when the main objective of an arrangement is to secure a tax benefit or a tax advantage, and at least one of the four tainted element tests is met. So now these tests are namely the misuse of law test, the commercial substance test, the arm's length test, and the bona fide purpose test. Now, while there is some guidance available on the commercial substance test in the Act, there is need of comprehensive guidance on all the other facets of GAAR. It may be, of course, very useful if case studies and examples are also released by the government. Then guidance is also required on whether judicial anti-avoidance doctrines they continue to operate alongside the statutory GAAR. As this is important as these overlaps are now increasingly being discussed and tested before the courts. And lastly, while procedural safeguards exist under the GAAR where mandatory reference to approving panel is required before invocation, there is no such safeguard when treaty benefits are denied under PPT. There is a need for a comparable mechanism where PPT is invoked because it could also have similar serious ramifications on the taxpayers.
Yes, these clarifications would be quite helpful considering the recent judicial pronouncements as well. What are the major recommendations from the perspective of non-residents, again from a tax certainty and dispute prevention standpoint?
Three key areas where guidance is required are, firstly, with the withdrawal of 2% equalization levy on e-commerce operators and 6% levy on online advertisements, income streams which were previously subject to EL now fall back within the ambit of Income Tax Act. This revives the earlier disputes and uncertainty on whether such incomes should be characterized as royalty, fee for technical services, or business income. Thereby, there is a need of clarity on these aspects. Secondly, in some recent cases, it was held that MLI provisions, including the principal purpose test or the PPT, they do not apply to a tax treaty unless the specific treaty has been separately notified. So this creates ambiguity as far as treaty applicability is concerned and needs urgent redressal. Lastly, let's talk about the SCP provisions. Now, the SCP provisions are also very widely worded and they potentially cover even the non-digital businesses. It is important to clarify that the provisions apply only to digital business models, that is, to digital goods and services, and it's also important that clear attribution rules for SCP provisions are notified.
Well, definitely, guidance on the points mentioned by you would certainly help the non-resident taxpayers. Now, in case of existing tax incentives promoting employment generation, what are the key clarifications required to minimize interpretational disputes and future litigation?
So, Section 80JJAA of the Act, which is the incentive to promote employment generation, provides a deduction at the rate of 30% of the additional employee cost subject to prescribed conditions for 3 assessment years to an eligible taxpayer. Now, this deduction is available under both taxation regimes which are available to companies. However, several interpretational issues exist in relation to this provision which require clarification from a tax certainty perspective. For example, clarity is required for cases where taxpayer has not claimed deduction in the first year. It could be on account of non-filing of the prescribed form or due to an oversight. Issue being whether for the remaining allocable amount for the subsequent 2 years, that is year 2 and year 3, can he claim this amount or claim this deduction despite the fact that no claim was made in year 1. Secondly, there is a ceiling on emoluments for eligible employees, which is rupees 25,000 per month. Now, situations may arise where the emoluments exceed rupees 25,000 in a particular month, for example, due to bonus, or even though the aggregate in annual emoluments do not exceed rupees 3 lakh. Now, clarity is required on whether the threshold of rupees 25,000 is to be applied strictly on a monthly basis or whether an annualized test of rupees 3 lakh may be applied. Also, there is a need being felt to increase this threshold of 25,000 per month. Then there is ambiguity as regards whether non-monetary compensation should also be included for the purpose of computing this threshold of 25,000 per month. Also, in cases where an employee works for multiple group entities, it is unclear which entity or whether at all entities may claim deduction in respect of the emoluments paid to such new employees. Lastly, in a business reorganization case, it is not clear if the entity formed pursuant to reorganization would be eligible to claim this deduction in respect of fresh hires made after reorganization. Though, in our view, the intent of the incentive to provide employment generation incentive seems to support this view. So, these are some of the issues where there is need of clarity.
Okay, so this is such an important tax incentive for employment generation. Hope the government looks into it and provide clarifications you just mentioned. Coming on to my last question. What is on the taxpayers' wish list as far as TDS reforms are concerned?
So TDS compliances, they do take a lot of time, and there is definitely a need or an urgent need to revamp the TDS framework. So the key recommendations in this connection are that a study may be conducted to identify TDS sections where collections are high. Others with insignificant contribution to the exchequer could either be deleted or merged. Any shortfall in collections would obviously be factored in the consequential advance tax figures. Also, it's desirable that only 2 to 3 rates are prescribed so that it becomes easier for taxpayers to comply. Further, the requirement to issue TDS certificates should be removed. This information is in any case already available in Form 26AS and the Annual Information Statement, that is the AIS. The TDS ledger mechanism may also be considered to avoid litigation on matching income with TDS. Now, these measures put together will go a long way in reducing compliance burden on taxpayers and mitigating litigation on interpretational issues.
That was incredibly insightful. Thank you so much, Richa, for picking up the top pre-budget recommendations and speak on the areas where clarifications are still required. We will be back soon with more expert conversations on tax, trade, and policy. Until then, thanks for tuning in to the PolicyCast.